Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, May the 7th. Prices are lower here this morning with the exception of bean oil, which is up about 20 to 25 points. We're currently 5 to 6 lower in the beans, 1 to 2 lower in the corn, lower across the board in the wheat, led by Kansas City. Speculative traders yesterday were pretty healthy buyers across the ag space, 7,000 corn, 14,000 in the beans, 12,000 in the wheat, 6,500 meal, and about 2,500 in the bean oil. The speculative long position in meal is now believed to be in excess of 60,000 contracts. Still short everywhere else, however. In corn, that short position now is likely under 200,000 contracts. And in soybeans now down to about 110 from its recent peak at 172. Weather-wise, we have another system moving across the Midwest today, expected to reach the Chicagoland area later this morning. Good rains yesterday in the eastern Corn Belt from the most recent system, and good rains overnight in the western Corn Belt from this current system should keep planting operations idle for much of the Midwest here for the next 24 or 48 hours. Once this event clears, the western Corn Belt is expected to stay cooler and in a drier pattern the rest of the week, enabling planting operations to continue. Eastern and central Midwest does look like we'll have to contend with moisture here for at least a couple more days. Planting progress came in. I felt at the low end of expectations, corn at 36 versus expectations of 40. We've fallen behind the year-ago pace and the 5-year average by just a touch. Most states are just a touch below the historical average. Iowa at 47% versus 53 average. Illinois at 32% versus 41 average. Emergence at 12%, just below still a touch above year-ago pace, however. Bean planting is 25%, a bit behind expectations as well. Still above the 21% average. However, we did fall below the year-ago pace at 30%. Winter wheat ratings did tick up 1% to 50%, good to excellent. I've got my winter wheat production forecast at 1.34 billion bushels. This is above the average trade guess, about 15 million and 90 million above last year's production. For Friday's WASI report, I see no changes to either the wheat or the soybean ending stocks figures. I do see corn stocks dropping 25 million to just under 2.1 billion. This due to higher demand for ethanol production. I've got new crop corn production at 14.87 billion, beans at 4.40 billion. This from the updated acreage data at the end of March, both in line with expectations. I've got corn ending stocks growing to 2.228 billion, about 50 million below the average estimate right now due to likely the higher demand numbers. And I've got soybeans jumping up to 395. That is down about 45 million from the average trade guess. Several contracts did make new highs overnight in the ag space before backing up. July beans are hanging in there, just still about $1 off of their recent lows. Markets just will continue to monitor the flooding situation in Rio Grande do Sul, where the local government did declare a state of emergency. Right now, we've got production losses likely falling in the range of 1.5 to 3 million metric tons. We've also dealing with some crushing operations down there, which are idle due to these flooding issues. July meal did peak last night at $390 a ton. July corn, the overnight high, we're up about 50 cents from the recent low. 503 is a key technical level there, which is a 50% Fibonacci retracement level. In Chicago wheat overnight, that did reject trade above the 650 level here overnight. However, there too is still holding about $1 off of the March lows. So thank you for listening, everyone, and I hope you have a wonderful day.